everybody, no matter how rich or poor, or whether you're Democrat or Republican, should have a good return for the money that they save. Good is not 0%. Good is not the rate of inflation. Good is above the rate of inflation. So if it's 10.75%, so be it, right? Like, everybody should have access to that.
I have to say, I love what Strategy is doing here, is bringing Phong Le to the spotlight. Before it was only Michael Saylor, and now Phong Le is in the role of CEO of Strategy, and it is great to hear his perspective. In this interview, he'll tell us where he came from, how he's so driven, what his vantage point on economics is. I just think it's a really, really great video, and it really makes me more bullish on Strategy, not financial advice.
Hey everyone, welcome back to the show. Thanks for joining us. Here with me this week is Phong Le. He is the CEO of Strategy. Phong, thanks so much for having me at your headquarters. Great to see you.
Thanks for coming and visiting us here.
I feel like we have a lot to talk about. So let's start with some topical things. Market sentiment has been a little bit bearish lately, but I can't think of a company or a group of people more bullish than the folks at Strategy. So talk to me about your reaction to really the negativity that we've seen surrounding Bitcoin and the lackluster price action.
You know, Bitcoin as a, call it 50 vol, 50 ARR asset gets a lot of attention when it goes up. It seems like the world is beautiful, everybody's happy, and when Bitcoin goes down, even if it's 10% and stays at a certain level, the bottom is falling out. It's the beginning of the next 4-year cycle, Bitcoin winter. So I'll start with it's very much sentiment driven. As a long-term investor, as someone who's buying and holding Bitcoin, ideally for eternity, you have to have a long time horizon. And as I've told others, the fundamentals of the market this year for Bitcoin couldn't be better. And so I try not to think too much in the short term. In fact, what you really want to do when you think about what to do with Bitcoin in the short term, you should be fairly methodical and mathematical about it, which is why we focus on things like MNAV, why we built out the Bitcoin treasury, why we built out the US dollar treasury. And in the long term, you think about the fundamentals of Bitcoin. And as you know, they really couldn't be better. We're sitting here 10 miles from Washington, D.C., and Washington, D.C. is fully supportive of Bitcoin like it's never been before. Mike and I have been traveling to visit many, many different traditional finance banks. He was in the Middle East. I was all across the U.S. We were together in New York City. And traditional finance now is trying to figure out how do they catch up and keep their assets on platform, which means giving people that access to Bitcoin on platform. And so if you think about what's happening with traditional powers of the world, the U.S. government, the U.S. banking system, they are all getting on board with Bitcoin. And that's extremely bullish for this year and 2026. Why the price action does what it does is sometimes hard to explain. But when you're an investor, you think about the long term of the asset class.
You and Michael Saylor have been visiting these big banks, right? We keep seeing these tweets, guess the bank. Some of them we can guess pretty easily. What exactly are you doing there? What are the conversations like? And does it have anything to do with what Michael recently said on stage in the Middle East, which is about digital money?
Yeah, there are multiple. If you start with, they're all trying to catch up with just the base of custodying Bitcoin and providing exchange services for Bitcoin. They've seen, for an example, Coinbase or Fidelity and what they're doing. And they want to be able to offer their customers native services with Bitcoin so they don't take the money off platform out to somewhere else. So I'll just start that as a baseline. I'll call it a checkings account and a savings account for Bitcoin, right? And then on top of that, what do they want to do? Then they want to offer things like Bitcoin lending, which means you get loans against Bitcoin. And we know a lot of folks are doing that on a one-to-one private loan basis, but they should provide it in general. Perhaps offering instruments that give you yield off of Bitcoin. That would be the next sort of step above that. And then a set of Bitcoin-backed products. Not too much different than what we do. An investment bank would want to be able to underwrite Bitcoin-backed securities like MSTR or like any of our preferreds. That would be a next step. And then you get into offering digital credit, right? Which would be our preferreds or a bank preferred based off of Bitcoin. And then the last thing, which is what Mike talked about at Bitcoin MENA in the Middle East, which is digital money, right? How do you give somebody essentially access to something that looks like money backed by Bitcoin that gives them a steady yield that's better than what they would get otherwise, called 8-9%. So the entire stack of services, and then you get into things like tokenization and stable coins, and you move on and on. I think the largest banks in the world and the largest banks in the U.S. are going to offer that entire stack of services in the next 2 to 3 years.
So what are these conversations like? I mean, are they positive? Are they saying, yeah, we're very interested? Or are you more teaching them about Bitcoin and why they should be doing this?
It varies depending on the bank, right? Like what I'll say is 3 years ago, you would find the one person in the bank who has been designated as the head of digital assets, given no power, but they want to say they have somebody. So when you come in, you can speak to them and they have access to nobody else. To this year, you get in a room of 15 people. 5 of them are positive. 10 of them are very skeptical. You have a risk person in the room. To more recently, they're building out products. And what do they want? We're the largest corporate holder of Bitcoin in the world. They like us as a customer, right? But they'd also like to know, what are we looking for in the experience? Again, that's varies based on the bank. Some of the banks are extremely early in the exploratory phase, and some are very far along and progressed. The other thing I would say is going from the one person who's designated as a digital assets person to talking to the most senior people in the banks. They all realize that this isn't going away, that Bitcoin is for everyone, and people are asking for access to the asset class, and they're either going to get it from their bank or they're going to get it elsewhere.
But it sounds like you're almost teaching them how to compete with you. Is that what you're doing? I mean, what if they were to issue Bitcoin-backed instruments like the preferreds that we saw in the market this year? Or are you okay with that?
Yeah, I'm not too worried about the competition from the banks. I just like I'm not worried about competition from digital asset treasury companies. We're at a phase in the life cycle of Bitcoin where access to the underlying asset is the most important thing. And if, somebody who's making $40,000 a year that has a Chase bank account that lives in, Minneapolis or somewhere wants to be able to access Bitcoin, and the only way they would consider doing it is through their Chase account and being able to transfer money from a checking account to Bitcoin, they're not the ones who are likely going to this month go and buy MSTR or go and buy Stretch. And if we find a way for ordinary citizens in America and around the world to onboard to Bitcoin, it frankly, one, is great for Bitcoin, but I think it's great for the country and it's great for the individuals, and it solves some of the issues we're seeing today, the income gap that we have, the lack of hope that you've talked about. And so it seems like it would be very small-minded if I was like, well, I don't want to help the person making $40,000 a year with a JP Morgan Chase account living in Minneapolis because I'm worried about my own product. Right. And that's the great thing about Bitcoin is team Bitcoin is team everybody.
Yeah.
It's not winners and losers. Everybody can win. And so I don't think it's a TradFi versus DeFi debate. We sit at the intersection of the two. That's what we've done successfully. And I think the more the traditional finance system, which runs 99% of the money in the US, right, the more they open up to Bitcoin, the more individual citizens will have access to Bitcoin, and the better it is for the country.
You brought up a really interesting point. That person that has their traditional bank account, they're making their regular income, the paycheck comes in as a direct deposit. The idea of a 10% or higher yielding savings account is very attractive. But I've heard the feedback. Sometimes people just don't know, how do I do that? Because their bank's not offering it. Yeah. Can you kind of break down, what Stretch is, who you're trying to reach, and how do people actually invest in it? How do they get a 10% yielding account?
Yeah, and it's 10.75% now, paid monthly in cash. I'll start with what is Stretch. All right, Stretch is the fourth of the 5 preferred securities that we've offered this year. But in plain layman's language, it's a security, it's an equity, that you can buy in the NASDAQ, 4-letter ticker STRC. And when you buy it, our objective, it is designed to be price stable. So unlike most securities you buy, where the price is quite volatile, right? If it's MSTR, it can be extremely volatile. If it's Tesla, it's pretty volatile, or Nvidia. Even if it's, AT&T or whatever T, it's still a pretty volatile stock. The price goes. We've designed a security to be price stable, and the volatility right now, right, is 5%. We want to take it down to 1%. So first, the idea of a security with a stable price is quite unique. It's a major innovation in the capital markets. If you're able to take a security and make it price stable, take the vol down to 0, and we're able to pay 10.75%, right? The Sharpe ratio, the risk-adjusted return, goes first to infinity, because the volatility is the denominator, and if the volatility gets to 0, then the Sharpe ratio goes to infinity, which is sort of a cool concept, right? It's a risk-adjusted return. So we pay 10.75%. That we can vary. What you end up getting if you buy STRC, right, is something that's designed to take volatility to 0, and you get paid monthly into whatever brokerage account you get. So if you have a Schwab account, or if you have an E-Trade account, or you have a Robinhood account, what you do is if you buy that at $100, then basically over the course of the year, you get $10.75 paid back into your account monthly, tax deferred. That's what it is. So think about, there are other preferred securities out there, but think about a dividend. Think about a dividend on a stock. You get a stock that pays a dividend. It might be quarterly, it might be annual. But the issue with that dividend is the stock price goes like this, right? And the dividend can be flat, but really, if you want something where you put short-term money somewhere, you want the dividend to be to go a little bit, change, and you want the price to be flat. It looks a lot like a money market. It's not a money market, but it looks a lot like that because you can put short-term money into it and get a yield that is 2 to 3 to 4% better than what you would get otherwise. And let's go back for a minute to that person in Minnesota. Is that where the person lived? Minnesota, who is making $40,000 a year and has $1,000, $10,000 if they're lucky in a JP Morgan Chase checking account. They're not getting 3.5%. They're getting 0. And so when you get 0 and inflation's 3-4%, if I'm getting paid nothing, you know what you do? You spend the money right away. Right. Because the longer you take to spend the money, the less the purchasing power.
Exactly. If
you get 4% and inflation's 2.5%, you might still spend the money right away. If you get 10.75%, you are more likely to save money. Mm-hmm. And it drives people in any income bracket, but especially in a low income bracket, to think, hey, now I have a place to put my money where it will return something greater than inflation. Therefore, I'm going to start saving money.
You bring up such a great point. I mean, it's true. People are making their income. It's sitting there in a checking or savings account earning nothing. If you have it in a money market, it's like 3.5% or so. And there's $8 trillion, I think, right now sitting on the sidelines in money market accounts. Yeah. How do you get them from that to stretch? How do you get them? I mean, 10.75%. How do you get them to make that move though?
It's distribution. It's marketing, right? Like any product. The distribution channel of money today is the traditional finance system, right? And I'd love to say that it's new applications, it's online, it's the Coinbases, the Robinhoods, the Square Cash apps, the PayPals, the Venmos, etc. And those are certainly a burgeoning trend. PayPal now is going to, getting a bank license. So, but it's the traditional finance system where people are making decisions with their short-term money, right? And so that's why it's important for us to work with the traditional finance system. And they want the same thing, right? Like they also want to be able to provide better outcomes to their customers, because if they're not providing 10% or 8%, somebody else is going to, right? Ultimately, the best product here, I think, wins. The challenge, I think, for a lot of people, when you think about, money is such an important asset. And for many people, the financial system is such an esoteric concept, right? Like I think about the food system, right? Like, and there's this movement towards farm to table eating, right? You plant, you put the cucumber seed in the ground, you see the plant come up in the spring, you pick the cucumber, you peel it, you eat it. That's the purest sense of farm to table. And what's happened over the course of the last 50 to 80 years, the industrialization of the food system, from where the seed goes into the ground to the cucumber at the grocery store to in your mouth, you have no idea what's happening in between.
Exactly.
I feel like that is our financial system today, right? As a software technology innovator, when I started to understand how the financial system works, the money that you get to the money that you spend is cycled through wholesalers, distributors. I won't call it washing of the money, but the money doesn't look like it does at the end. And as I get into, okay, so you've got the banks, you have the asset managers, you have the fund managers, and now we're figuring out you have all these indices, you have the ratings agencies, and then you have all the government regulation around it. We're not like Bitcoin is farm to table money, right? Like it's like the best thing you had before that was gold. Yeah. You could go mine gold, you get your flake of gold, your gold rock, you hold in your hand, that's your gold. Yeah. Bitcoin is farm-to-table money because the monetary system now, nobody knows how it works, just like you don't know how that cucumber that you buy at the grocery store down there, is it even a cucumber? What the heck is in it? Where did it come from? And so I think Bitcoin solves that problem, but it will solve the problem of the traditional finance system too, right? People will get back to this idea of I put in an hour's worth of work, I made $20, I convert it into Bitcoin, it sits there, and it grows over time.
Right.
Or I work, I get $20, I put it into Stretch, I get 10.75%, and I know how it works over time.
And can you explain the tax advantage? Because the way I understand it is you almost stumbled upon that. It wasn't even planned for, that there's this return of capital, right? Yeah. Which is not subject to taxes immediately.
Yeah, I'll start with, in the last 5 years, there's a lot we stumbled upon, right? Like this is, but the more time, Bitcoin's like that too, right? Like, I think I've told people, like, if I look back at my life, I can find steps of the way in my life, from being a child to going to college to my career. It was all sort of set up for Bitcoin, and you realize it looking at it in retrospect, but not as you go along. Totally. That's how I felt with Stretch and a lot of the things we've done in the last 5 years. If I look back, it's extremely clear, thoughtful. You might even say, hey, Phong, you and Mike and the board and everybody, you sat down and you planned the 5 years out almost perfectly. Not really, right? We can go back and pretend that it was perfect, but it was a set of innovations found because we were very focused on providing a set of innovations to our shareholders and ultimately trying to increase Bitcoin per share. Now, what happened with Stretch was what happened with our first four, or all five of the preferreds we did this year, is we structured them in a way that they were sitting as part of our overall organization, our overall cap structure, our corporation, which has negative taxable earnings and profits, which is different, by the way, than the negative accounting GAAP earnings and profits. Your taxable income is different than your GAAP income. I'll start with that. And as an individual, you sort of understand it too, right? Like you have your W-2, the money you take home, you put in your bank account. Then when you do your tax return, the numbers all change a little bit for a variety of reasons. Certain investments, some things are deductible, some things are not. We as a company, because of our software business, have negative earnings and profits. And a lot of that is because of what we pay out in stock-based comp on an actual cash basis. Is negated against our earnings and profits. And so because our company has been growing and our equity has been growing, our stock-based comp payouts have been growing, counts against the earnings of the software business, cause us to have negative earnings and profits. When you have negative earnings and profits, the dividend, if you will, that's paid out of the preferred can't be paid as a return on capital, because there is no return. There's nothing to pay out of earnings and profits. So you're actually paying out of the capital itself, which
Wow.
makes it a return of capital. So basically, if you have $100 in stretch and you get paid $10 in dividend, the instrument itself goes down to $90, and we've paid you $10 of that. And because of that, the cost basis decreases, and you're not taxed on it until you sell the underlying. And this is it actually makes logical sense, return of versus return on capital when you think about it. But tax sometimes doesn't make logical sense to a lot of people. But in this particular case, this is tax deferred until you sell the underlying.
That's fascinating. One of the recent headlines that we've seen from Strategy is this USD reserve. I think it's like $1.2 or $4 billion.
$1.44 billion.
$1.4 billion, so that you can pay the dividends for several years, really, if anything were to happen to Bitcoin's price, if it were to stagnate or go into a bear market. Can you talk about the process of making that decision? And was it a response to the credit agencies? Was it a response to the sentiment or the questions online surrounding how are the dividends paid? Like, what came to that decision?
There are multiple factors, and one key factor is the quality of our credit. And we want the credit to ultimately go from having no rating to what we now have, which is considered a high yield rating, to being investment grade. And from a rating agency perspective, one way you increase the rating is to have cash to cover the dividend. So that was one input. It's not the primary driver, but that was one input. Another, which is related to that, is for people to get more confident to buy into our prefers, which causes the prefers to increase in price, which allows us to issue more preferreds, which ultimately increases the amplification in the company. We realized that by putting together a US dollar reserve, that would help the amplification of the preferred or the quality of the preferred and amplification of the company. And there are two factors that works a little bit in contrast there. One, which is issuing equity at a premium to build up a US dollar base, is accretive in terms of US dollar gain, but decretive in terms of Bitcoin per share, right? So if you look at it just purely on math, you wouldn't put it together a US dollar reserve. But if a US dollar reserve allows you to improve the credit quality of your prefers, issue more prefers, that's accretive to Bitcoin per share. So you put those two things together, one that on a math basis is dilutive to Bitcoin per share, one which as you build the preferred base increases Bitcoin per share. They actually work together properly, right? So that was the second reason. The third reason is this FUD about we're sell our Bitcoin, right? And there was a concern that if the company operates at below 1x MNAV for a sustained period of time, we would have to sell our Bitcoin to pay our dividends. And we would do that if we had to, right? Above that, we would sell Bitcoin derivatives to pay our dividends, and above that we have our equity. But we wanted to create a cushion so that negative sentiment and the negative dialogue, the narrative goes away. So those are reasons we did it, and we had great advice from some of our board members and some of our shareholders, and I'm happy we did it, and it was the right thing. But it certainly required a lot of strategic thinking.
I feel like at one point it would have been surprising to hear that Strategy was willing to sell any Bitcoin at all. So is this an evolution, or is this something where, this seems like worst case scenario planning kind of thing? Like if we had to, we would.
I think if we ever were in a situation where we would have to either choose between defaulting on our credit, not paying our dividends, and not doing what's right for our shareholders, we would sell our Bitcoin. Ultimately, our responsibility is to our shareholders. That's our fiduciary responsibility, one, and then a responsibility to the Bitcoin community, right? But that's number two, right? Number one is a responsibility to our shareholders. And all classes of shareholders are common, are preferred, and are convertibles. And so that's our primary responsibility. Now, you can satisfy both, which is why we issued the US dollar dividend, which is putting ourselves in a situation where we can, one, cover 21 months of dividends, two, cover 72 years of dividends with our Bitcoin, which takes us to 2100, right? And if Bitcoin goes down in half, it takes us to 2065, right? And so stating that we're willing to sell our Bitcoin is respectful to our shareholders. It's the right thing to state. Stating that we don't think we'll ever have to sell them is also respectful to our shareholders in the Bitcoin community. And so you can have two truths. One is we'll sell our Bitcoin if we need to. Two, we do not expect to ever have to sell our Bitcoin. That's how we'll run our business.
The question that I get is that you are ready to adapt. I mean, market sentiment can change, new things develop. You issued these instruments, so now you have these dividends to pay out to the tune of several $100 million, right? And sometimes you have to pivot. I mean, is that the way that the market should read it? That you're very highly adaptable, essentially?
Yeah, we're a Bitcoin treasury company. We're an operating company. It's not too different than a technology company. Like, you wouldn't want a technology company say, I created this product 10 years ago. I'll go 5 years ago. I created this product 5 years ago, and no matter what happens in the outside world with competition, with the price of the underlying inputs, with changes in the channel, I'm just going to not change it all.
Yeah.
Right? We are a innovative Bitcoin treasury company and a technology company, and you have to adapt or die, right? Like, a human being has to adapt over time, right? I love when Larry Fink said, hey, you know what? I thought Bitcoin was bad. Now I think it's good. And if I was so stuck in my ways that I never adapted, then BlackRock wouldn't be as successful as it is. You have to adapt. It's okay to say one thing 5 years ago and say something different 5 years later. In fact, I think that's the strength. That's a sign of strength in leadership, is your willingness to admit that you have to adapt and change over time.
I'm glad you said that, because that's how I saw it really too. And we've seen companies not take that direction and not be able to steer the ship in a new way. I think there are a lot of people, there's fodder out there, of course, but I think a lot of people saw it as a positive. Let's talk about MSCI, because they came out with this memo. I think it also had some ripple effects in the price. We had those huge liquidation events on October 10th, and some even connected the MSCI memo to that. I don't know if that's true or not, or if that's just a narrative, but tell me how big of a deal it was that they put out this memo and this decision that they're considering removing digital asset treasuries from index inclusion.
I'll start with that. I think the sentiment is much worse than the reality. And this market sentiment is always hard to measure, but I remember I was in Australia when the news came out from JP Morgan, and we'd known about this, weeks in advance and didn't think it was a big deal. And I had people coming up to me and saying, Phong, I heard you're getting delisted. Right. And I'm like, what do you mean? Like, I heard you're getting delisted from the NASDAQ. We're not going to be able to buy and sell your stock anymore. And I'm like, well, delisted from the MSCI. First of all, delisted, probably the wrong term. Right. And no longer qualifying for the certain indices in the MSCI would be the right term. Is a lot different than getting delisted from the NASDAQ, which is an existential issue. And so there was a lot of lack of understanding of what it meant. Another piece of lack of understanding, I think JP Morgan said that we have about $2.8 billion in MSCI related indices. My understanding and our research says the number is closer to 1.5, maybe $2 billion. So I think it's overstated. But let's say it was $2.5 billion. That is half of our trading volume on a daily basis. Okay, it's not that much. And I get $2.5 billion sounds like a lot, but we're a $60 billion market cap company that trades $5 billion a day. This is not an existential issue to us. To me, put us aside, we'll address the issue, we'll move on, we'll survive. The issue is how it is taking a fairly uneducated and antagonistic view versus an early innovative asset class. Right. And this really hasn't been done in the past. Right. And we've drawn the analogies to whether it be holding oil on your balance sheet. Chevron holds something like 67% of their balance sheet in oil. The timber industry, you look at the gold industry, you look at the cellular industry, the mobile industry, the internet. AI REITs, right? Like Simon Property Groups is right next door. They have like 80% of their assets in real estate. Why single out digital assets, right? And it's still not clear to me why you would single out digital assets when it's such an early time for innovation in the industry. This is not the time to slow it down. This is not time to choke it. I hear people calling it Operation Choke Point 3.0, right? And what is the role of an index provider? They actually just build the index. I didn't really learn this until more recently. They build an index. They sell the analytics and the capabilities of the index to a BlackRock or to a Vanguard, who then actually assemble the equities, the securities in that index, and then they sell it out. So here you are, right, sort of behind closed doors. Right? I respect MSCI. They're a public company, and they seem to be fairly well run, but in a very opaque manner, are taking an antagonistic position on a particular asset class. 5 years of digital asset treasury companies, 5 years into the first one ever being created. Really 1 year into a landslide of now about 200 companies that call them digital asset treasury companies. I don't know what's behind why somebody like that would take such an antagonistic view against an asset class so early in its inception. And the good thing is the discussion is coming to the forefront. You've seen all these thousands of people come in support of digital assets, Bitcoin, other companies that are related to this. I mean, they're not, and then they go and attack like Bitcoin miners, Mara, right? Like calling them a fund, not an operating company. Like we're clearly an operating company, not a fund, right? And maybe they don't understand, the software business. They don't understand what we do, backed securities that we're providing. But you take a Bitcoin mining company, Mara, right, where you go to Texas and you see these huge data centers, right? And part of it, they're renting out to high performance compute. Are you telling me that is not an operating company? Or are you telling me that what they're doing, you can take an environmental point of view, maybe that Bitcoin miners are worse than oil miners, maybe, right? But how can you say that they don't, that American citizens, when they're investing in an MSCI index, shouldn't have exposure to Bitcoin mining companies or to strategy? I'm optimistic this will play out positively, and I'm glad the conversation is out there, because once we solve the MSCI issue, I think other indices, the bigger ones like the S&P 500 will realize they will become educated on what we do, and getting access to the trillions of dollars that go into the S&P indices. I think that'll then start to open up, because now everyone's frozen because of this discussion.
Well, I think there is a lack of education and fundamental understanding that led to this. So, I mean, maybe someone from MSCI is watching this or listening to it, or maybe, they're just in the public and they agree that, they look at these Bitcoin treasuries emerging. They don't understand the core businesses. It seems like they're just, accumulating a ton of Bitcoin, and that's the core business now. They're just holding a bunch of Bitcoin. What do you say to them to explain that there is a functioning operating company behind it and it's not a fund? How do you explain that?
I think there is I'll call it legal and corporate argument, which is no matter how you look at our company, we are an operating company, not a closed-ended fund, not an ETF, right? Put that aside for a minute. The more important thing for me is we are very early with digital asset treasury companies. And to come in this early and make a statement that they should not be included in indices is picking winners and losers. Just let this thing play out for 5 years. And after 5 years, we come back and look at it. That's the time for someone to say where passive money should be invested. Right? Like it would be similar to right now saying, hey, we're not going to let any companies that are capitalized on AI data centers to be included in our indices. Way too early. Way too early to make that statement. I don't think anyone would ever make that statement 20 years from now, let alone now. But what's great about innovation in America is people can invest in early technologies, and passive money can go into early technologies through these indices. so that they can grow the industries, and then let the market play itself out, right? The market will play itself out. People who are directly investing, right? If I'm going to buy MSTR, or if I'm going to buy Mara, or if I'm going to buy NVDA, or whatever it is, GOOG, that's a decision that an individual can make. But when it comes to passive investments into major indices and funds, what people want is for it to be representative of American companies or worldwide companies. And I'd like to think that we're representative of American industry.
Talk to us a little bit about Strategy's focus, because you do have this business intelligence arm, and then you have the Bitcoin side. Like what percentage is what? I mean, you're obviously more focused, I'm assuming, on the Bitcoin side, or maybe it's no, you're on top of all of it. So you're probably involved in both sides. But what do you say to people who think that, hey, eventually you guys will be maybe a Bitcoin bank, you'll be offering primarily Bitcoin services? Do you even need the business intelligence software side?
Yeah, I'll start with our software business has been in place since 1989. It too was founded by Michael Saylor, and we serve half of the S&P 500 roughly. We have about 4,000 customers around the world. We exist in 27 countries. It's about $470 million in revenue. It's growing about 3% a year. And we innovate in the business intelligence business. We invented the space as you know it, analytics on mobile devices, on the web. We invented all of that, right? This has been an amazing 36-year business. And we continue to build new things. We've got we have some of the best software engineers in the world. We have centers in Warsaw, in Chennai, in Hangzhou. Like it's this great, robust, lively business. It just happens to be worth $2 or $3 billion in a $60 billion company, right? And that doesn't make the $2 to $3 billion business any less worthwhile, because if you had a $2 or $3 billion business attached to nothing, it doesn't mean that is worth more than a $2 to $3 billion business attached to a $60 billion business. And so I love our software business. I love spending time with customers and seeing how, a lot of the household names around here are customers, right? You go into a Hilton hotel, and behind the desk, they're using Strategy analytics software, right? As an example, just because they're down the road. Freddie Mac's another one of our customers down the road in the DC area. They're all using our software. It's lovely. It's robust. It's lively. It allows us to be in this beautiful building, which is 200,000 square feet. It allows us to have this great studio here where we're able to film this podcast. We've got a gym. We have we have great people in finance. We have amazing technologists building websites. We have brilliant legal minds. And those are the people that are also working on the Bitcoin side, right? And it's a lot easier to build a Bitcoin treasury company off of an existing operating company because we didn't have to hire a bunch of staff from scratch. We're using the brilliant minds of the software business. And I think that's the big benefit that we get out of attaching this super innovative Bitcoin treasury company to a software business. And I think it's been great for both parts of our organization. And I would argue that we wouldn't have been able to do what we've done in Bitcoin as quickly and as innovatively if it wasn't for the software business.
Well, it always helps to have a strong cash flowing business at the core that you can build the treasury with. When you look out at the other Bitcoin treasury companies, what do you think? Because I feel like the space has changed. There are some that are not performing very well. There are some worries in the market. What do you say? I mean, what does it take to be a strong Bitcoin treasury company knowing that they will not be able to catch up to a strategy at this point?
I think it's the same as any industry. If you look at AI today, or if you look at electric cars, or if you look at media, streaming video, like entering a business where there is an incumbent is hard. We're the incumbent in the U.S. digital asset treasury company. Other people are trying to enter. And if you think about venture companies that are trying to enter a space that's innovative and growing, what do you look for in a venture capital company? You want to make sure it's well capitalized. You want to make sure that it has a good business plan, right? What is its competitive differentiation? And ultimately, a lot of people choose a venture capital company on the management team, experience of the leadership? Are they able to move fast? Are they dedicated? And then what is their competitive advantage? If you go around the world, the competitive advantage of a lot of digital asset treasury companies, think about MetaPlanet in Japan, SmarterWeb in the UK, Orange in Brazil, is they are located in those countries. They're public companies in those countries, and they have regulatory approval to sell securities in those countries. That's a competitive advantage. Now you go to the US-based ones, you have to ask, what's the competitive advantage? Right? What are they? How are they innovating? And do you like the management team? And that's the same assessment you have for any startup, for any new company. Just because they decided to enter the space of AI, or they entered the space of electric cars, or they entered the space of streaming video, or they entered the space of digital assets, doesn't by definition make them a valuable company.
I agree with that. It's really interesting that you point to these evaluation metrics, because we hear about, things like, MNAVs now, Bitcoin yield per share, but there are things that are deeper that you really have to evaluate. What is the business? Yeah. Who is the management team? And where are they serving? What are the advantages of maybe the jurisdiction they're in? Because to your point, we're seeing some pop up in these different countries where there are real advantages in those capital markets, whether it be because of tax reasons or whatnot. But you're starting to venture into some of those international markets. Can you tell me the reasoning behind that? And it seems like you're going to be some competition for some treasury companies that are outside of the U.S.
Yeah, look, if you think about the world, and we want to access capital to buy Bitcoin, and we want to provide our products and services in countries where those don't exist, and territories where those doesn't exist. At some point in time, just like with our software business, like many other companies, you decide to move internationally. We think we have something that's quite unique in some of the products, like creating some of the preferred products we created. They're unique. They require a certain level of understanding. They require a certain level of scale too, right? And so if we built that product in the U.S., and we think it's attractive to U.S. buyers, we've raised $7 billion so far this year, then that product should be attractive all around the world. And if you think about pools of capital, you think about the euro, you think about the Japanese yen, you think about the Canadian dollar, the Australian dollar, you think about going to the Middle East, and each of them have their own regulatory challenges, for sure. And because we have the finance team, the legal team, and we have the experience doing it, we're working through all those countries. They're definitely not as easy as the U.S. People who primarily spend their time in the U.S. have access to our capital markets, don't quite realize how amazing our capital markets here are. Number one, we're at the forefront in innovation, but we're also in the forefront in terms of just regulatory clarity, and I think that's not the same. And I would say governmental support, and that's not the same around the world. But we're going to work through that. We're going to break down the barriers just like we have here.
So you have 5 preferreds, and I'm guessing 2026 we'll see more.
Yeah, so we have our 5. Really, there are 4 core, right? Strike, which is our convertible preferred. Strife, which I'll call it our long duration senior preferred. Stride, which is our long duration short junior preferred. And Stretch, which is our stable money market like preferred. And so if you have those 4, what we said is, well, there's 2 really killer ones. There's 2 that are doing, probably most representative, which is Strife, long duration senior, and Stretch, right? And so could we launch a variety of Strife and Stretch in major markets? What we launched in Europe was Stream, which is Strife in Europe. Get it? Stream. Okay. And then maybe we'll launch a Stretch in Europe. Stretch is much more innovative. We'll take longer to launch in Europe. And so if we could take those 2, Strife and Stretch, and put a version in Canada, put a version in Japan, put a version in Europe, put a version in the Middle East, that would be what you might think about. I think the 4 in the U.S. are probably sufficient at this point in time. All that said, going international is one opportunity. Seasoning the U.S., back to what we were talking about earlier, making everybody in the U.S. aware that Stretch gives people hope, gives people access to Bitcoin with stable price, right? zero vol, hopefully over time, and 10.75% return. That's what we want to do. And we're going to do that through the traditional banking system with digital credit and then digital money. That's our goal.
You mentioned regulatory clarity, and right now we have a very favorable administration when it comes to this industry. What if that changes? Because there are some, there's volatility on the political side. There's a lot of populism coming up and people that are frustrated and feeling like, they're not able to afford the cost of living and they're looking out. It seems like we're just repeating the same pattern, Phong, right? Red, no, this isn't working. Blue, no, this isn't working. Red, no, this isn't working. Blue. We're just going back and forth and back and forth. And you can understand some of the frustration that's been built up. And it's all, we know the core is the fiat system, this inflationary system that's punishing savers and making it so hard for people to, be able to preserve their purchasing power, much less grow it. So do you worry about, what if we do get a regime that's a little bit more hostile to Bitcoin? And how are you planning for the next couple of years?
There are core tenets under which this country was founded that are agreeable between Democrats, Republicans, the rich, the poor. Freedom is one of them, right? Freedom of speech, freedom of religion, and ultimately the freedom and a call of equality and the ability to have equal opportunity, right? And if you start with some of these base tenets that there's no debate, this is a nonpartisan debate, you realize that Bitcoin addresses those freedoms, right? Like equal opportunity doesn't mean equal outcomes. It means equal opportunity. And so everybody, no matter how rich or poor you are, should be able to self-custody the money that you earned. And everybody, no matter how rich or poor, or whether you're Democrat or Republican, should have a good return for the money that they save, right? Good is not 0%. Good is not the rate of inflation. Good is above the rate of inflation. So if it's 10.75%, so be it, right? Like everybody should have access to that. This is not a partisan discussion. I don't know why, for the most, like just because the Republicans realize that the rich and poor both like Bitcoin, it doesn't make it a Republican thing.
Right.
Right. And so I think what we're realizing over the course of this 4-year administration, and I think people are realizing it, is Bitcoin is not partisan. Bitcoin is for everybody. Your words, not mine. Bitcoin is freedom. Bitcoin is hope. And so my hope is that during this 4-year period, everybody figures this out, and everybody will, enough people that no matter who is in control of the government, that they realize access to Bitcoin is such a core tenet, that it has nothing to do with who's in power.
Yeah, fundamental human right. All of that's so well said. Well, we have something in common. We're both immigrants. We have immigrant backgrounds, and you are really a true symbol of what the American dream can represent. So can you talk a little bit about your background? Because I think my audience would love to hear just what your family went through for you to be able to become the CEO of the company that owns the most Bitcoin on the planet.
First of all, thank you for asking. And immigrants, we get the job done.
Yeah, that's right.
So the story, and when I talk about Bitcoin is one of those things where when you discover it, you look back at the last 45 years of your life and everything becomes clear. The analogy I've given to others is I really like M. Night Shyamalan movies. And The Sixth Sense I thought was an amazing movie. And I remember it's like, I see dead people. And at the end, Haley Joel Osment realizes Bruce Willis was dead. And they replay the movie in a small clip. It's like, everything made sense.
Right.
I feel like that's what Bitcoin did for me, is when I discovered it, I went back and said, well, this all makes sense now.
Exactly.
And part of that was, so my immigrant story was I was born in Saigon in 1976, a year after the fall of Saigon. My parents were fairly middle class in South Vietnam. They and their family had businesses. My dad in agriculture, my mom in clothing and apparel, and so like many people in Vietnam and around the world, your wealth is through your businesses and your money. And so when the North Vietnamese took over South Vietnam, like when many regimes take over another, the first thing they do is they nationalize the currency of the country they take over, and they deem it worthless, which meant any money that was in a South Vietnamese bank was written to zero, and any cash you had, South Vietnamese dong, you had to bring into the bank, and in return for no matter how much you had, they gave you back 200 North Vietnamese dong, which is equivalent to $10. Didn't matter if you had $10,000, $100,000, $1 million, everybody got $10. And on top of that, if you had gold was no longer legal to own, right? So turn all your gold in. Now, most people would sew it in their clothes, put it in their mattresses. If you had gold. So basically, all of the wealth that you and your generations of family had earned over time went to $10, right? And your property, of course, your businesses also ceased.
Not yours.
Not yours. And this happens extraordinarily quite often, even to this day, around the world. Right. And there's many examples of that, whether like, why do you not want to hold Russian rubles? Why do you not want to hold Argentinian pesos? And the list goes on and on. So my parents said, I was 2, my sister was 4. Well, this sucks. What are we going to do? And they decided that, this is so bad. Let's just go out into the South China Sea and let's sail out and go find a different place. And so this is the story of the Vietnamese boat people. And in hindsight, there are about 1 million people that decide to escape Vietnam the same way out to the water. And about half, anywhere between, don't know for sure, but 25 to 50% of the folks died at sea. We were lucky enough. We made it out. And 3 days later, we're picked up by a shipping boat going from Germany to Singapore. And so we were taken down there, myself, my sister, my parents, put in a refugee camp. And we won the lottery. We were taken in by a Catholic church in Syracuse, New York.
Sorry to interrupt you, but do you remember being in that boat? Like, do you remember all of this?
I don't, but enough. When you hear enough stories, you feel like you were there.
Yeah.
My first memory actually was when I was 2 and in Syracuse, New York. And we lived quite a bit of poverty. And when we were there, the first thing that I remember happening, this story is not related to Bitcoin, but it's just a funny story. My first memory was we were robbed. Like somebody came into our house. I was 2.5, and the first thing I thought to myself was we are so poor. The person who robbed us, like they made the worst decision of anybody robbed. But anyways, that's the side thing. That was my first memory. But it makes you realize if Bitcoin had existed, this never would have happened, but I never would have ended up likely where I am because I would have grown up in South Vietnam, which now Vietnam in general is a vibrant economy and doing very well. It's becoming more and more capitalistic. But coming to the U.S. early on, we didn't have a lot of money, obviously. And so the second sort of monetary story that I look back upon was my parents went through vocational school, worked. My dad worked 3 jobs a day. They didn't make a lot of money, about $1,000 a month post-taxes. And from time to time, they would want to send money back to Vietnam. And back then, the relationships between the countries weren't very strong. Clinton ultimately opened up the relationships, commercial relationships in 1992. But in the 80s, if you want to send money to a family member who didn't know, you didn't exactly know how to do, you would go to these gold shops, and they were run by Vietnamese, and they would take about 30% of your money.
Wow.
All right, so we're not making a lot of money. We're sending money back, and somebody somewhere, remember, hard-earned money is taking 30% of it, and Bitcoin solves that too.
Yes.
All right, so it solves all these things, and so these are I like digital capital. I like digital money. I like all these things. I like giving people 10.75%. I like running the largest Bitcoin treasury company in the world, being worth $60 billion. These are all fantastic first world things. There are third world things that Bitcoin solves. And so when we talk about, well, what if the Democrats take over and they win? Are they going to get rid of Bitcoin? One, they can't, because these are democratic values, just like they're Republican values.
Your story is truly incredible. And I've met so many fellow immigrants where I think a lot of the grit and the determination and motivation comes from these humble beginnings where it was kind of like you had to make it. You had to survive, and you wanted to justify all the sacrifices that your parents, that your family made for you to be able to have this incredible opportunity to be here, to actually make something of your life in this country. And so how did you get from that, Catholic or church that was helping you guys to running this public company? What steps did you take?
What I do, like any good Asian immigrant kid, I worked hard. I got into math. I got into science. And I went to school and took out a lot of student debt, but mostly got scholarships because we didn't have a lot of money. I did my undergrad at Johns Hopkins in biomedical and chemical engineering. Of course, why did I do that? Because it has the best medical school in the country, and I was going to be a doctor.
I was just like Andrew.
Yeah, who doesn't, like, whose Asian parents don't want them to be a doctor, right? Like, and so partway through school, I found out my skill sets were more in finance and systems. And it was something that I was much more passionate about. So I graduated and worked for Deloitte as essentially a software engineer, systems analyst, built analytics software, started using MicroStrategy in 2000, got to know the company really well, went to business school at MIT, learned finance, learned economics, thought I learned finance and economics at MIT. And then I came back, I became a finance guy. And, throughout the career, I ended up at MicroStrategy in 2015 as the CFO. And a lot of that was hard work. And your point, Natalie, is it absolutely is the American dream. It absolutely is. And my big worry today, and you hear people talk about it a lot, is the value system has changed as to what the new generation of parents and kids care about. And there's debates around, why are people not, learning STEM? Why are they learning whatever it is, history, sociology? Not that I have anything against that, right? Why is there not hope anymore? And a lot of times it comes down to a big blame on culture. And I don't think the culture of the country has changed in such an insidious fashion that now people don't care about advancement in the American dream. I think it's money. And you've talked about this. It's not the underlying culture. It's not like 60 years or 40 years later, all of a sudden people are being born like less hardworking or caring less about STEM, science and technology and math. I actually think the issue is the monetary system has given people less hope and less desire to work hard for the American dream. Because if you live in a world where inflation is running rampant and money printing is running rampant, and you realize that if you don't do anything, if you just run to stand still, the government will take care of you through printing more money, and that's easier than working hard, then you're just going to not work hard.
Right.
And that's where we need to get back to a monetary system where if you save your money, it actually grows and it increases your earning potential. And I think people will then wake up and say, well, the government's not going to just keep printing more money. If I save money or if I invest money, it's going to be worth more over time. I'm going to get back to working hard. I'm going to have my kids learn science and technology. And we can get back to the American dream that was the reality of what you and I faced 20, 30, 40 years ago. And so it's not a cultural thing. It's not the kids aren't all right because social media is not great, right? But I think it's the base of, if I work hard and I save money, I will improve the outcomes for the future. And I think Bitcoin and the principles behind Bitcoin will help improve that.
I love that you just said that, because I wrote exactly about this in the book. And we call it the American dream, but it's really a universal one. That's what brought so many people here. But people need to feel like their work is paying off. And that's where I feel like the incentives have become so broken, because if you see yourself working hard and you've followed all the rules and you went to the right school and you've filled out all the checklists, and you're still not able to even just tread water You can't buy the house. You can't, start the company. You can't achieve the dream. I feel like a lot of people are getting in their own way all of a sudden saying, well, then I give up. I can't do it anymore. Or someone please hand it out to me. And there's been really almost a demonization of like capitalism, the wealthy. There's a resentment toward it. I mean, do you want to comment on that at all? Because, you've built your way all the way up where you are. You are in that class of the wealthy, the successful. And there are a lot of people looking up at you going, that's not fair. You need to share with me. I want some of that. It's not fair that I'm not able to afford a house or any of the things that I want when a generation ago my family could. What do you say to that attitude that we see that is really anti-capitalism now and wants to tax the rich?
Yeah, I heard my dad tell stories about Vietnam versus here, and he will always unequivocally say living in Vietnam was easier. It was easier. I didn't have to work as hard, and the living was easy. And then he comes here and he says, I had to work 3 jobs. He started businesses, but we're not like, just to further the stereotype, they opened a Subway. They opened a nail salon and a liquor store.
Really?
It barely broke even on any of these enterprises. And he's like, he did not create wealth for himself. He created wealth for the next generation, which is me, right? And so, but he worked his butt off throughout the way. And that created generational wealth and allowed me to create generational wealth. And that came from daring, innovation, and hard work. You compare that to a communistic country or communist country where you don't have to work hard, but you have no way to create true wealth, right? And so, which do you want? Right? Like if you want to demonize the rich, realize for the most part, we worked hard. We took our created opportunity for ourselves or saw opportunity. We seized it. And now we're creating wealth for the next generation. You can have the alternative. You can live in a socialist, communist country where the opportunities are less, but the living's easy. Right. And my dad will say he chose this path. He would never choose any other path because he created the opportunity for his children. And this is where your time horizon, your time preference matters. Right. The hard work, the capitalism is not just for you. It's for your children. And it's for the next 100 years and it's next 1,000 years. And I think if anything, the last 250 years have proven capitalism works, right? It works as a system, but you have to buy into it.
Well, and you also have to have better capital, right? Yeah. If you have this crazy inflationary capital where everyone's running and chasing yield and, the hurdle rate's essentially this basket of companies, the S&P 500, that also skews things a lot. Maybe you can't really have true capitalism the way you could on something like a Bitcoin standard. And I feel like our families actually have a lot in common. Even though they were a world apart, my family growing up in Poland, it was a lot of the same thing. People hiding the money that they could get their hands on. There were actually, I talk about this in Bitcoin is for Everyone. There was a police force, the SB, that would come around to see if you had dollars or a form of money that you shouldn't have. And I share a story in the book that one of our family friends, my grandma would tell this story. She put it in the diaper of her baby, the cash that her husband was sending back, and she was rocking the baby, praying that the police doesn't look into the diaper of all things, because they ransacked the house looking for it because a neighbor tattled. I mean, who wants that world, right? But we're all equal in it, right? So it's just so fascinating to hear your story, Phong. You're so inspiring. Thank you so much for all the time. Anything else you want to share or leave our audience with?
I think this was fantastic, Natalie. And thank you for everything you've done for the space and the book and for educating the world on Bitcoin.
Well, thank you so much. We can't wait to see what's in store in 2026. Hopefully Bitcoin's price will cooperate a little bit, but we're on this journey together and you guys have done an incredible job. I'm so proud to know all of you. So thank you so much, Phong.
Thank you too.